So what does today's report mean for the Fed? Does it change anything in terms of your outlook, in terms of when they're going to hike and the pace at which they would hike?
I don't think it's going to change anything about the pace that they're going to hike. In fact, I think it fits pretty well with the view that we're going to have a gradual uptick in rates when the Fed starts to raise rates. I think as far as the timing, on net, it pushes you a little bit away from September toward December, but we have two more labor reports before this September meeting to really get through a lot more data.
Savita, does today's report change anything for your perspective?
Yeah, I mean, we're sticking with our September call that the Fed starts in September. They hike 25 basis points every other session. But I agree. The jobs report today was meh, so it does sort of maybe
your technical term.
My technical term, exactly. It's a quantitative term, but it might push the date out to December. I agree with that rationale. I think though that it's going to be a quiet summer. There's not that much information that comes out over the next few months, right? I mean, we have Jackson Hole, that's the biggie, but there's not a lot of Fed rhetoric that's going to come out over the next couple of months, which is interesting. That could add a little bit of nervousness and skittishness to the market.
Tim, one of the disappointing numbers today was that wage growth number did not grow as much as economists were expecting. What do you chalk this up to? Why do we continue to be disappointed by this number month after month?
It's hard to argue anything other than that there's a lot of slack in this market. The labor market just is not eating up the slack, that we're well above the natural rate of unemployment, and that's really keeping a lid on wage growth. I think that's really what we're looking at here.
And, of course, the other big part that really stood out was that labor force participation rate now down at the lowest level since 1977. The issue is that Janet Yellen seemed to think that as the job market recovered, more people would come back in the labor force. Yep. Is this an anomaly or is this a trend?
It's hard to say. I mean, maybe the structural unemployment level stays high for the foreseeable future. I think, though, we are seeing signs of labor inflation in a material way. The reason I say that is, a lot more companies are actually guiding down on wage pressure, are even missing earnings on wage inflation. So I think that's actually a good sign for the economy, but maybe not such a great sign for some of the more labor-intensive stocks.
That really brings up the question of where we're seeing the wage inflation. If you take a look at, say, the services sector job growth versus manufacturing, we have seen a real divergence, and the services sector isn't necessarily a place where you're going to see a huge amount of wage increases. Tim, what do you think about that? Is this divergence between services and manufacturing here to stay?
It looks like it's going to be a persistent trend, and that is something that the Fed will have to grapple with. I think on average, though, the Fed looks at wages across the economy, and will look at this data and say, yes, there's probably some, tantalizing hints of wage growth, and we've seen that in a couple of indicators lately, but we're not seeing the broad-based kind of stronger wage growth that would really sort of raise their interest in speeding up the pace of rate increases. I think that generally we're moving in the right direction, but we're just not quite there yet.
So one of the things, if you think about this past week, this was not a particularly great week for the Fed in terms of hoping it could raise wages, because exactly 1 week ago at this time we got the news that Greece was going to be a little crazier than we thought when the referendum was announced. And then today's disappointing number. You can see it in the Fed funds futures curve that, the expectations for the rate path is lower. What does this mean to you when you sort of look at the market? This sort of, it's not huge, but this change in perception of the Fed, does this change your outlook at all?
It doesn't. I still think we're going to get off of that zero bound at some point within the next, let's call it 6 months. And that, I think, is a resounding positive for stocks. So I know there's a lot of nervousness around the Fed rate hike, but I think that this could be the confidence signal that we need in the U.S. and on a global basis, because it tells us that this $4.5 trillion experiment that we engaged in the United States of easing our way out of the recession actually worked, and we're finally ready to unwind liquidity. So I don't see this as a big risk to the stock market overall. I don't see it as a risk to cyclicals outperforming defensives. I think timing is tricky, but we kind of know it's going to happen in the next 6 months or so.
Like what the Fed says, we just want to do it just to do it.
Just get it done with. Yeah, get it behind us, and let's move on and get off of zero. Because, I mean, if you think about it, 0% on the Fed funds rate is like for an emergency situation. We're not in an emergency situation anymore.
I just want to do a little bit of housekeeping. Before we forget, we got to acknowledge that our Twitter winner from yesterday got 275K tweeting. That was the closest of the people who tweeted WDYM and NFP guesses, so congratulations to I can't read the name, but we'll get something out to you. All right.
And next week, we have a lot coming up, and I want to know what everyone is looking at. Around rapid fire here. Tim, what's the number one thing you want to know?
We're looking at the FOMC minutes and Yellen.
Savita?
Earnings. I think we need to see top-line growth in order to feel better about this recovery that we're in.
Alcoa Wednesday. How about you, Joe?
I can't think about anything until the referendum on Sunday.
I'm thinking about China. Stock market, Shanghai Composite under 4,000. We get CPI coming out midweek.
Big week.